What's going on, guys? Welcome back to another video. This is the post-market analysis for yesterday, March 1st, 2024. So this was the post-market analysis yesterday. So if we watch that pre-market analysis, right, we were talking about um how how NASDAQ, let me get rid of this, how NASDAQ took out these prior weekly highs and how the ES was in a six sister. So Nasdaq took out these prior weekly highs, right? And ES was in a bullish order flow. So ES was pushing higher in prices, as you guys can see. ES came lower into this H4 bullish fair value gap, right? Strong support level. And then we saw that reversal yesterday, Thursday, and then we seen Nasdaq take out these prior weekly highs, so it only made sense for the ES to also come up and reach up into these prior weekly highs with the Nasdaq. So that's what we're anticipating, right? Coming into the market opening here, we had marked out this order block down here. We had marked out this order block, and we wanted to see price action find support, right, at a support level to then anticipate that continuation lower. To anticipate that continuation higher back up into these weekly highs. Essentially we were bullish, right? We were bullish. Um, we wanted to see continued higher prices because yesterday we gained a reversal, right? Yesterday we reversed higher and we still have these areas of targeting, so we're anticipating the continuation higher. So coming down into the M15, we had this bearish, right, fair value gap, but right, we're not going to take a short inside this bearish fair value gap because we understand the order flow is bullish. We want to see higher prices, right? If the order flow is bullish and your bias and narrative is bullish and you want to see higher prices, that means that you want to see bearish fair value gaps be broken and turned into inversions. So as you guys can see, we broke above this bearish fair value gap just like so. And we also had this bullish fair value gap right here, which we did miss an entry on. We did miss the entry. We wanted to see price action come down into the 25% level, right, on this M15, right? Stop loss down here, and unfortunately, it came down into the opening and left us. So, right, come down into the M5 here, right? We had that M15 bullish fair value gap. It simply came into the opening and then left us, right? Obviously, we should have, honestly, it, one side of me is like we should have put it at the opening, but then another side of me is I'm just sticking to my plan, right? 25%, like that 25% level of fair value gap is my sweet spot. So I'm not gonna be like I should have put it at the opening because I'm just following my plan, right? So you're gonna miss trades, you're gonna miss opportunities, and that's just how the market is, right? But we did take um Dow Jones trades here. So um even though we ended the day in the win, this was very sloppy, right? So down here we have a SMT divergence, right? Nasdaq didn't take out this low, ES didn't take out this low, but the Dow Jones did, right? The Dow Jones did. And what we want to see here, we want to see Dow Jones break this low, push higher, right? Break above this bearish fair value gap, and we want to see a pullback in this bearish fair value gap, right? This inversion level for that continued move higher. We didn't get that. Then we want to see a pullback here into this fair value gap, right? For continued move higher. We didn't get that. So I'm starting to trade at 950. So I'm almost an hour 30 into the market, and we've just missed out on two great opportunities, right? And I didn't make the best decision, right? So I had a limit order down here for this fair value gap, anticipating a pullback, right? This was the trade idea. Let me see, 50 points stop loss. So like right here. like right here. So this was the trade idea right here. This was my limit order, right? And I moved my limit order from down here to up here to this fair value gap. And the reason why I moved my limit order from down here to up here was because of fear, right? I missed out on this trade. I missed out on this trade, right? I feared price action was not going to come down here, even though it most certainly was going to come down here. Most certainly, I feared it wasn't going to happen, right? So I simply, so in fear of price action not coming down here, right, I took the quick fair value gap entry, right? Like the closest fair value gap, right? Fearful of this not working out. And I ended up getting stopped out by 1 pip. 1 pip, right? So not only was I fearful, right, of not getting of price action not tagging me in because I missed out on this trade idea, then I missed out on this trade idea, right? So now I'm I'm a little annoyed, right? Price action is not giving me the pullbacks that I want. I just want to get into a trade, right? That's my mindset this time. I just want to get into a trade. I'm tired of price leaving me. I need to be in this move, right? Which is a terrible, terrible, terrible mindset to have. Like that's coming from me. Like honestly, that's not a good mindset to have. And it's unfortunate, right? It's unfortunate. So I took the closest right trade. This is very low probability, right? This is very, very low probability, right? Price action was obviously gonna break through this fair value gap to tap into this fair value gap. Why? Because this is a deeper pullback, right? This gives smart money the best opportunities to add to their positions, right? The best opportunities to add to their positions. Smart money is not gonna add to their positions here. They're gonna want a deeper pullback. They're gonna want a discount. They're gonna want to buy it at a discount level. This is that discount level, right? And the fact that I put my limit order here was simply out of fear that, you know, what if it doesn't tag me in? What if it never comes back down here? And I miss out on a trade for the third time, right? It was very it was very annoying, right? And I didn't have a good stop loss. I did not have a good stop loss at all. My stop loss should have been, at least below this low, right? At least below this low. This should have been my stop loss, right? My stop loss was directly inside of the fair value gap, which you don't want it to be. You don't want it to be inside of the fair value gap, right? You want it to be below the low. So like down here, this should have been my stop loss at least, right? If I was gonna get the quick entry, I at least should have had a good stop loss. I didn't have a good entry or a good stop loss, so I ended up taking a loss here because I was not following my plan, right? And this is just being transparent with you guys, right? Right. So this is why it's important to not allow yourself to derail from the plan. I derailed from the plan. Me missing out on this trade, then missing out on this trade, put me in an emotional state where it's like I just need to get into a trade. I'm tired of price leaving me. This is annoying. And that ended up costing me a loss. That ended up turning into a loss because of it, right? So this is why it's important to have a plan and follow a plan, and this is why trading is so difficult. Trading is more than just a strategy. Trading is discipline, right? You have to be disciplined, and I can be honest with you, on this day I was not as disciplined, right? I was not as disciplined this day, right? It's the Friday. I've been training all week. It's the Friday. Um, my mental capital wasn't there that day. Plus, I just missed out on two great opportunities. So I was not as focused and as disciplined I should have been today. And, it's okay, right? You're not always gonna be disciplined, every single day as a trader. You're gonna have days where you're gonna be a little unfocused, right? And, it's just don't allow your unfocusedness and your annoyance, right, to dictate your trading. I let that dictate my trading. You know, I was annoyed that I missed out on these two great opportunities to get into a trade, so I took a low probability setup instead of waiting for that high probability setup. I took a low probability setup instead of waiting for the high probability setup because my mindset was now affected, right? And this is why trading is so difficult, because you have to keep the same mindset, the same discipline every single day, right? Every single day, the same mindset, same discipline. So, you know, it it it's good that I can do this post market analysis and break down, you know, and actually break this down, right? I'm not only learning from it, but you guys are also learning it, right? This goes to show the importance of following your trading plan and following your trading strategy and not allowing your emotions to get the best of you, because that's what I did today. I allowed the emotions to get the best of me. I feared price action was not going to tag me in because I missed out on these two trades, so I took a low probability setup that I knew was going to tag me in, and that ended up being a loss. So after taking this loss here, we see this rejection wick, right? Price action came down into this bullish fair value gap. We see the rejection wick, and I got right back in. Right up here, I got right back in the trade. Stop loss like just below down here, and we're targeting like 100 points, like 120 points. And this was another mistake I made today. So another mistake I made today was greed. Let me see. No, I got like right up here, like right up here. Yeah, another mistake was greed, right? I was aiming for 120 points. Price action came up here for 100 points, right? And right, and I wanted that entire 120 points, despite price action took out liquidity, right? If you're ever in the opportunity when you're given like a 2R or a 3R and price action takes out liquidity or taps into a bearish PD array, take it, right? Take it, because this is what happens if you don't. This is what happens when you don't, right? Instead of taking the profit off at 100 points and being content with 100 points, I stayed in this trade, right? Because I wanted my full target. I got greedy, and price action came back lower over 90 points before I finally sold right here for about 70 points. So I missed out on over 100 points, right? Now I missed out on over 30 points because I wanted to make an extra 18. So me wanting to make an extra 18 points made me miss out on overall um 30 points, right? And this is where greed comes into the equation, right? And this is where I struggle with on the Dow Jones, right? I'm not greedy, or I don't suffer from greed on the ES or the S&P 500, but for the Dow Jones, I do, because I don't trade the Dow Jones as much as I trade the S&P 500. So it's gonna take more time and more experience of me trading the Dow Jones to understand um how much I should be risking and how much I should be charging per trade, right? It's gonna take time for me to learn that. So, from this example here, right, it's always important that when you're given the opportunity to sell the marketplace, right, at or below an old high or low, or at a PD array, right? And you're given a good risk reward. In this case, it was a 3R. This was a 3 to 1R. If you're given that opportunity, take it, right? Don't try to aim for the full target. If you're given that opportunity and you're seeing signatures of it reversing and you have a great R, take it. Always take it, right? Don't suffer from greed, right? Because this is what happens, right? Trying to make an extra 18 points led me to losing out on over 30 points. I lost double, right? Trying to make an extra 18 points. I lost double that. So, right, when you're given the opportunity to take the trade off the table, take it, right? So these were the two trades I took today. I mean, not the best trading day at all. And coming into the market, I knew I wasn't gonna have the best trading day because I didn't come to a market focused. I didn't come to a market as prepared I should have been. Um, and not every single day is 100%. You're not gonna give it 100% every single day. You're just not. Like you're not a robot. You're not gonna give it 100% every single day. The key is, and mind you, the key is the days that you're not there 100%, right, is to either walk away or limit yourself from causing damage. Because it's those days that you're not giving it 100% that you can truly like hurt yourself and blow your accounts. Is the days where you came to a market unprepared, unfocused, right? The days you come to a market, you woke up on the wrong side of the bed or you didn't feel that good. These are the days where you can really do damage to yourself, and it's important to, right? It's important to either walk away or, um, limit yourself, right? All right, because the novice trader, right? They would have taken this loss, went short, took another loss, went long, right? Seen it pull back, took it off. Like, they would have been gambling, right? But I took a loss and I got right back in because I had the same, right? I had the same trade idea, same plan. I just had the poor execution and I understood that. I understood that, okay, I had the wrong execution. I'm gonna get back in, right? Because I had the right trade idea. I just had the wrong execution, right? Right. So I'm able to recognize my flaws in real time and make improvements on the fly. While the novice trader or the new trader, right, they'll take a loss and then they'll start gambling. I take a loss, I learn from it, and I improve, right? And that's where you guys need to be as traders, right? I took a loss from this trade, but I improved. I got a better entry here, but obviously I still have more things to improve on, like exits, right? I'm pretty good at entries, but what I'm not good at is exits, right? So, this is, some I can improve on for sure, right? At or below old highs or lows, right? If you're given the opportunity to take 2 or 3 hour off the table, take it, right? Don't try and hold for the full target because you never know if it will ever hit. So that's what I learned today, and that's how I'm, getting better every day. So boom. So that was a trade idea today. Based off of the SMT divergence, we've seen this push higher, right? This fair value gap here, right? If we stuck to our original trade idea, this would have been the trade and we would have gone out like right here. Wow, for over 120 points. Wow, this would have been the original trade idea if we just stick to our plan. Wow, this is why it's important to stick to the plan, guys. If we simply just stick to the plan, this would have been the trade idea. We literally would have caught the low and we would have sold at like near these highs. If we simply stick to a plan, right? Always, always, always stick to a plan. And you guys are learning it real time from me. You guys are learning it real time from me. Me not sticking to a plan made me lose. The only like it's crazy. Like most of my losses are because I'm not sticking to my plan. And that's why trading is so difficult. Because it requires discipline. And it requires discipline outside of the marketplace. It requires discipline in your real life and in the markets to stick to your plan, right? And lately I've been lacking that discipline. So, I'm starting to get back in routine, starting to get back in the groove, but you can see a direct reflection. Me being undisciplined in my real life made me undisciplined in the markets. Like, I hope you guys can see the direct correlation here, right? I should have waited until price action came down here to then take the trade idea, but instead, I didn't follow my plan and I was emotional and I got a poor entry and got stopped out and had to get a worser entry when I should have just stuck to my plan, right? So this is why it's important to always stick to a plan, right? You know, always stick to a plan, always stick to the rules because in the long run, that's what's going to save you. So that's what we learned today, right? We learned um we had a trade breakdown here. Dow Jones longs, Nasdaq ES, continued higher, right? And we had a psychology lesson on the importance of sticking to a plan and not letting the markets or your emotions get the best of you. Because the moment you allow your emotions to get the best of you is the moment that you are susceptible to a loss, right? That's the moment you're susceptible to a loss, right? I should have seen price action leave, leave, leave here, and I should have been like, okay, it's leaving me. I'm not gonna get emotional. I'm gonna stick to the plan. And if I did that, I would have been rewarded. But I didn't do that. And me not doing that made this loss happen. And right, it's fortunate that we made it back. And this is another psychology lesson. So this win right here, even though it wasn't the best win, right? This win right here, back here, made back not only today's losses, but also yesterday's losses. So today was, yeah, today we made back all of today's losses plus yesterday's losses with this one win right here. So, just the importance of risk management. Even though today wasn't the best day, very sloppy, the risk management aspect was there, and we're able to bounce back. Right, right. And then dollar, we came up, swept these high of weeks, and then news came out and the dollar tanked and continued going lower. And then GBP and euro, right? GU and euro, right? Bullish fair value gap here on euro. Wait for news to come out, right? Wait for news come out. Never trade before news, right? News came out. We saw bullish push higher on the euro. Bullish fair value gap came back down into it. You know, what a put came back up into it. Stop loss down here. Maybe targeting these highs, right? Targeting about these highs. So about a 1.78 R. Let me see. Yeah, move or stop just right here, or maybe down here actually, right? For about 3R. And euro, I mean GBP, we had this bullish fair value gap. Price came back down into it, right? Price came down into it right here, 1030. Stop loss just down here. And yeah, let's see if we could get a 2R. Yeah, we eventually do get a 2R. So, um, yeah, yeah. So that's gonna be, 4x. We did have a SMT here. As you can see, we have kind of equal lows here. Equal lows here on EU. And then GU actually took out these lows right here. So after creating those equal lows and then GU, right? You could have honestly taken this inversion trade actually, right? Actually, no, it never came back down into it, right? It never came back down into it. Yeah. But seeing the SMT divergence plus a break above this bearish fair value gap, something that I did learn from the Dow Jones is, right, price action might not come. So what we missed out on the Dow Jones is we were anticipating the inversion fair value gap, right? We're anticipating a pullback down here for continuation higher, but price action might not do that. price action may never pull back. So going forward, if I notice a SMT divergence and we get some type of break above a bearish fair value gap, right? As we get that closer above, I'm a market execute. So this is why I should have done. I should have market executed as we got that closure above with stop loss just below, right? Just below this low. And this would have been the trade idea, right? This would have been the trade idea. So going forward, if we get a SMT divergence and we get this break higher, I'm gonna market execute, right? And we got that right here. So we got that SMT divergence with the EU. Then we saw this break above this bearish fair value gap. This would have been your trade idea right here. So you would have market executed, stop loss, you know, just below this low, right? Just below the inversion fair value gap, targeting back above these highs. But if you missed out on that opportunity, then obviously pull back into this fair value gap, like so. Maybe yeah, down here like so for about a 2 to 1 hour. So if I were to trade Forex, that's what I'd be looking at for today. All right, that's a post market analysis. See you guys later.